What is up, and welcome back to another video. In this video I'm going to be talking about your guys' favorite strategy. I'm going to be going over it from the start, and that is the silver bullet strategy. Now, if you're unfamiliar with the silver bullet strategy, it is one of the ICT strategy that he has taught himself. He's taught like the full strategy, and is a very simple strategy to learn. Extremely good, very good win rate, and it is incredibly well to tell you when there are going to be big reversals in the market, like today. As you can see, we had this move up, this fake move up, manipulation, and then we had this big drop. And if you trade the ICT silver bullets, then you would have been able to catch this move. I called it in my Discord. I trade live every single day, Monday to Friday, on my Discord. So if you want some free live trading, just go to my Discord. The link will be in the description. So let's get started. So what exactly is the silver bullet trade? Now, the silver bullet trade only works between certain time frames. So you can only trade the silver bullet from 9:50 a.m. New York time, so UTC -5, to 11 a.m. New York time. And then there is also a PM session, but we are only focusing under an AM session, sorry, but we are only focusing on the New York AM session today. So we're looking at the times from 9:50, so that's right here, all the way till 11, which is right here. So this is the time that we can find the silver bullet trade. So silver bullet trade to, 9:50 a.m. to 11 a.m. New York time. Okay, so that is what you can trade. Now, this is very important. If you don't trade within this time, then it is not a silver bullet trade, and you are just trading for the sake of trading. This won't be a silver bullet because the strategy that I'm about to show you is you can use it whenever in the market, but it just will not work as it does within this time frame. And yeah, this is a trade that I actually took myself today as well. So let's jump straight into it. So what is the silver bullet strategy? So when you're in this time frame, what you want to do is you want to target opposing liquidity. Now, if you do not know how to find liquidity, I'd done a video on it yesterday. So just watch my video yesterday that is specifically all about liquidity. But if you don't know, then quickly. So for example, here we are pumping up price. So if we're looking at price from this point right here, just when the macro starts, our sell side liquidity would be right here. This would be sell side liquidity because it is a swing low, and all that sell side liquidity means is just there are lots of stop losses resting here. So that will be our target for this case for the silver bullet because it is a sell side liquidity. You could also target here because this is internal liquidity, so this would be a good spot to put your target to break even if we get into a trade. And yeah, so that is the first thing that you want to look for. You want to look for your opposing liquidity. Now, this is a lot more important than just finding your target, because this will be the reason why you enter into a short or a long. So you want to make sure that your liquidity target is correct. And then what you next want to look for is displacement. So you want to look for displacement in the direction of your liquidity. So for example, here we are bearish, so we're going to want to see a bearish black candle. In this case, that shows that we want to go down. So once you have this displacement, what you next want is a fair value gap. So then a fair value gap, and this will be purely for your entry into the market. So this is what you're going to be entering off. So if we play this price action out, as you can see, we are just slowly trending up, just manipulating price. And then what do we get here? We get a black candle displacing down, and it creates a fair value gap. So this would be a fair value gap right here. If you don't know what a fair value gap is, then I've got lots of videos on fair value gaps, but all it is a imbalance in the market, so where orders haven't filled yet. So one way to find a fair value gap is if you count 3 candles and the first and the third candle are not touching, that is where the fair value gap is. So as you can see right here, we have this first candle right there is not touching this third candle. So that will be where the fair value gap is. I hope that makes sense for you guys. So this would be our entry. Now, there are multiple ways that you could enter into this trade. Me personally, I like to just enter as soon as price touches into the fair value gap. So I would enter right there. My stop loss would either be at this internal buy side liquidity, or if I want a bit more breathing room, I can put it at the external buy side liquidity, which is sitting right here. So this is buy side liquidity. So that is where I would put my stop loss, and as I said earlier, you could target right here as your first take profit or your stop loss to break even. But overall, what you want to do is you want to target your main sell side liquidity, and yeah, once you're entered into the trade, you can play the price out, and as you can see, we sweep this sell side liquidity right here. So what you could do at this point is you could put your entry, you could put your stop loss to break even. So what that means is if price now comes up, you don't lose any money, you don't gain any money, you just exit the trade, break even. And another thing that you could also do is take some partials off right here. Now what that means is if you're in a trade and you're up $100 at this point, let's just say, you could take $50 off, so that's your profit, and then you could let the other 50 ride all the way down to this sell side liquidity, or that other 50 could go to break even back up here. So if we play at the price action, as you can see, price absolutely smashes the take profit, and that would be the silver bullet short for today, which I did take on my personal trading account. So yeah, you just need to make sure that you're following these steps. The excuse me, the silver bullet trade is very simple. It's quite a mechanical. You might get multiple fair value gaps. You might get 2 fair value gaps in the space of the 9:50 till 11 a.m. And you also might be wondering, why am I using 9:50 and not 10 till 11 a.m. Now the reason for that is because that is a macro. There is a macro from 9:50 till 10 past 10. So sometimes the fair value gap and the move likes to happen before we even reach 10. So that is just to make sure that we don't miss out on the move. And another question that I get is, can you enter a trade if the fair value gap happens before this time? And the answer is yes, but I wouldn't do that if you're a bit inexperienced. I'll wait until you get a bit more time in the markets. And what I mean by that is, let's say a candle is created over here, and you want to okay, let's imagine that this price action is bullish right now, and this is our silver bullet lung. We're looking for lung, let's just say, and people ask, can I use this fair value gap, a fair value gap that is before the time? So as you can see, this fair value gap was created at 9:32. Yes, you can use these fair value gaps, but as I just said, you want to make sure you're a bit more experienced, because you want to be making sure that you use the right fair value gaps. So yeah, I hope this video helped. Just a quick video on the silver bullet. Those are the main things that you need to remember: displacement, fair value gap, and targeting opposing liquidity. Make sure to join my Discord and follow my Instagram.